Well, stock markets are expected to soar to fresh record highs. Despite increased speculation, the Reserve Bank will be forced to increase interest rates sooner than its forecast date of 2023. Ross Greenwood joins me here to explain. Now, Ross, good morning to you. So this is on the back of these numbers, yeah? Incredible unemployment numbers. It's been quite a week for Josh Frydenberg, hasn't it been?
Just saying that is that those super reforms are really significant, and to have got them through the crossbenches was a big victory for the Treasurer and for the government as well, there's no doubt. Now, bear in mind that there was a campaign that had been run by industry super funds in Australia that said that this was going to cost you significant amounts of money, that people would be effectively locked into low-performing funds. But I get the sense that they're wrong. I get the sense here that really this is an ability for people to be able to compare their super funds, to be able to make certain that they're not in an underperforming fund, and indeed the fact that APRA, the regulator, is going to look at each fund and assess it. And if they fail the test in 2 consecutive years, will not be able to take on any new members. Those funds will be effectively forced to merge into bigger funds. I think this is one of the keys and why it's good. And of course, given the stock market where it is right now, record levels again today it will be at, this year you're going to see at least a 10% plus return for most balanced funds. People can compare that, see whether they're keeping up. If they're not, they can clearly move funds, and that's important.
So that's the key number there. If they're not at 10%, get out.
10% plus. But we'll give you a better feeling for this towards June 30 as to what it should be. But certainly at this stage, with the stock market being where it's been over this year and the recovery, that's the key right now.
It makes sense though, doesn't it? Streamlining your super.
One fund for your life. The idea that people had multiple funds was an absolute joke in this country. So you turn up to a new job, you get a new super fund. So you lose money through the fees. So that's what this is designed to overcome. The industry super funds, and they're brilliant, they're efficient, they're a lot of things, but they wanted literally the monopoly on this. And that's the absolute key. There needs to still be competition in this sector.
Okay, so this comes down to the question about whether you believe the inflation that's around right now, second-hand cars, travel, building materials, is it temporary or is it permanent? Because the US Federal Reserve and our Reserve Bank both say it's temporary.
Well, that's the truth. And the whole point about this is they say it's temporary. Some in the markets believe it's not. Now, one person you've got to think about is Janet Yellen, the US Treasury Secretary, the former chairman of the US Federal Reserve. Here's what she said last night.
I don't believe that we're at risk of hyperinflation. We've had several months of high inflation that most economists, including me, believe will be transitory as our economy gets back in full swing after the pandemic and prices recover from the very low levels.
Okay, but if they're wrong and inflation is here to stay, does that mean interest rates rise and the markets are at risk of collapse? Except they keep rising?
Yes, that's right. So the markets are at risk of collapse if these interest rates rise. If they can't get rid of the inflation, the way in which you get rid of inflation, if it becomes systemic, is to have an economic downturn. That's the way you get rid of it. That's what markets fear. But right now, the markets are believing Janet Yellen. They're believing Philip Lowe from the Reserve Bank. And they're basically saying, we believe that, like them, they think that this inflation is temporary. It will go away once things start to normalise. And as a result, you won't need a market crash. That's why, on a day when all of this is happening, Australia's stock market's going to rise 0.5%. It's going to go to new all-time records. So in other words, they actually believe this story right now.
Okay, but if inflation is here to stay, then clearly investors are going to run for the hills and buy things like gold and Bitcoin.
Bitcoin.
There it is.
There you go. Comes up again, doesn't it? Right. So here's the interesting thing about this. So, of course, cryptocurrency. But I want to take you to overnight the governor of the Bank of England. So this fellow overnight has basically come out, Andrew Bailey, and said this to anybody who's considering this. It's not a bad thing. They've done a survey showing that people have got a bit of FOMO here, fear of missing out. So this is his quote. If you buy Bitcoin, Dogecoin, Ethereum, listen to this, Pete, or any other digital currency, you should be prepared to lose all your money, right? That they have no intrinsic value. So that is the head of the Bank of England who's told you that, Pete, overnight.
I
lose all your money.
I remember asking you about this years ago, and I said, what do you make about this? And you said, you're better off putting your money on horse 6 and race 4 at Randwick on the weekend.
Well, that's because you'd lose it much quicker and have much more fun and have a couple of beers at the same time.
Quickly, back on the RBA, they're still going to keep rates the same until 2024. Do you think it's likely that the banks will pull the trigger before then?
Well, they already are. So if you say, for example, look at fixed rate loans on mortgages, so 3-year fixed rate loans, a month or so ago, a couple of months ago, you could get a 1.8, 1.9 for those. At the moment, it's a 2 point something. So they're already starting, because they're watching this, they're starting to actually hedge a few of their bets.
Variable too?
And not variable. So variable are still in the ones, very much so. So nobody's really changing those at the moment. It's the fixed rates, because they're the ones that are linked to the money markets that have started to rise in recent months.
And do you think that will force the RBA's hand eventually?
No, absolutely not. The RBA will look through all of this. They have a plan. And my understanding is only in the past couple of weeks, Philip Lowe has told groups of our major finance ministers in Australia that rather than having a 4 in front of the unemployment rate, they don't believe it's full employment until we get a 3 in front of it. So they can see unemployment dropping significantly lower than it is today.
Again, that amazing story, you'd have to think the way things are going, the next figure that comes through will probably have a 4 in front of it.
There's no doubt the way in which it looked yesterday, 5.1%, incredible.
Amazing. Ross, great talk as always. Talk to you soon.